Today, we've got a real puzzle on our hands. The market was staring down some seriously bad news. A government shutdown is looming, consumer data looks weak, and yet it rallied. How in the world does that happen? All right, let's get into it and figure this out.
So we're breaking down the trading action for Tuesday, September 30th, 2024. And let me tell you, it was a day that really defied all the expectations.
Here's a quick look at what we're going to cover. First, we'll tackle the puzzle of the rally itself. Then, we'll dig into what was actually driving it. We'll spotlight the top stocks, lay out 3 possible investment scenarios from here, and then wrap it all up with the final takeaway.
Okay, let's jump right in. Section 1, this was a truly puzzling rally. I mean, the session seemed to just completely shrug off all the negative headlines swirling around.
You know, despite starting the day in the red, all 3 major indices managed to claw their way back to finish in positive territory. The S&P 500 closed up 0.41%, the Nasdaq added 0.31%, and the Dow tacked on 0.18%. A totally different vibe from where we started the morning.
It was really a tale of 2 different markets today. The morning was all about fear, right? The shutdown deadline is getting super close, and those consumer confidence numbers were not great. But then it was like a switch flipped. A huge wave of buying came in late in the day, powered by big moves in tech and healthcare, and it just completely changed the narrative.
So how do you read this? Well, the most positive spin is that the market is showing some real resilience. You've got the strength in AI and a comeback in healthcare, creating a nice balanced foundation. But the more negative view? It says this rally is paper thin, really fragile, and it's just masking the deep uncertainty that a government shutdown could still unleash. So let's peel back the layers a bit. In our next section, we're going to unpack the key drivers, the specific forces that were pushing and pulling on the market all day long.
All right, here are the top 5 things you need to know about. First, that looming shutdown is creating this backdrop of uncertainty. But second, you had this massive AI deal that sent NVIDIA to a record high, which just proves demand is still absolutely red hot. Third, a huge rally for big pharma stocks after a deal between Pfizer and the Trump administration took a major worry off the table. Fourth, a little something called window dressing. We'll explain that in just a sec. And finally, that weak economic data I mentioned with consumer confidence hitting a 5-month low.
So what on earth is window dressing? Well, it's a classic end-of-quarter move. Think about it. Big mutual fund managers want their portfolios to look as good as possible for their quarterly reports. So what do? They sell off their losers and buy more of their big winners, like NVIDIA. It creates this kind of artificial burst of buying right before the quarter closes. And you can really see this play out when you look at the sector performance. Healthcare was the absolute star of the show, up almost 2.5%. And information technology, yeah, that was mostly the AI names. It wasn't far behind, gaining almost a full percent. These 2 sectors basically put the entire market on their backs today. All right, now let's zoom in from the big picture to the individual stocks. We're going to look at the biggest movers, shakers, and headline makers of the day. The AI theme was just on fire. You had NVIDIA hitting an all-time high, up 2.6%, and its partner, CoreWeave, absolutely skyrocketed, almost 12% after landing a huge contract with Meta. Then you have healthcare showing its muscle, with Pfizer surging almost 7% on that positive deal news. Now on the flip side, it was a rough day for the space company Firefly. It plummeted over 20% after a test rocket exploded. And one more for you. After the closing bell, Nike got a nice little pop after its earnings report came in better than expected. Okay, so that's what happened today. But what about tomorrow? Let's talk about the so what. We're going to pivot to 3 potential investment scenarios based on today's action and how you might think about navigating what comes next. So we've mapped out 3 different strategies here, really based on your personal appetite for risk. The high-risk play, you chase that AI momentum. The medium-risk idea is to rotate into that rebounding healthcare sector. And of course, the low-risk approach is to put safety first. So first up, the high-risk strategy. The thinking here is pretty simple. You believe the AI growth story is the single most powerful force in the market today, period. You're betting these massive deals are just going to keep on coming. So a key trigger to get in might be buying on any small dips, and a signal to maybe get out if you start hearing big tech companies talk about slowing down their AI spending. All right, next is the medium risk approach. This is all about capitalizing on that big shift we saw into healthcare. With some of that political uncertainty out of the way, it looks like big money is flowing back into these stocks. You'd probably want to get in as this new uptrend gets going, and you might think about getting out if you see the market's attention swing aggressively back to only high-growth tech names. And finally, we have the low-risk strategy. This is really for anyone looking at the whole shutdown mess and just saying, you know what, I want to be protected. The goal here is to hedge against that volatility. Gold is a classic safe haven. You'd probably accumulate it slowly over time. And a key reason to maybe sell some would be if you hear central banks starting to talk really tough about fighting inflation again.
So let's bring it all together. After a complex and, frankly, contradictory day like today, what are the most crucial points you should be walking away with?
I think this quote from Peter Bookvar really nails the sentiment among a lot of professional investors. He's basically saying that these shutdowns are political theater. They happen, they cause a lot of noise, and then they end. The serious investors are trying to look right through that noise to the fundamentals underneath.
But listen, that doesn't mean there is zero risks. There absolutely are. Here are the two big ones to keep on your radar. First, how long does the shutdown last? If this thing drags on for more than a couple of weeks, it could start messing with the economic data the Fed needs to make decisions. That's a problem. Second, this is a very narrow rally. It's leaning really heavily on just a handful of giant tech stocks. If they start to stumble, the whole market could go down with them.
And that really brings us to the final, critical question that defined today's trading. Is the huge, long-term boom happening in artificial intelligence powerful enough for investors to just completely ignore the short-term dysfunction coming out of Washington? For today, the answer was a clear yes. The real question is, will that answer still be yes tomorrow?